All right, so Trump just officially bombed Iran. What is going to happen to our crypto and stock portfolios? I want to look at the market from a risk on perspective. I'm about to go take my daughters to go swimming, and I'm like, yo, I need to make a video on this, kind of important because this could actually start a World War III. And I'm not going to get into the politics of it. I'm not going to get into all that. I just simply want to understand how to make money. Now, I want you guys to look at this chart here. I think it's one of the most important charts right now when it comes to understanding how World War III can affect financial assets. Listen to what I'm saying for a second. Okay, pause, listen, because it's important. So as you can see right here, this is the World War III topic on Google. So for example, the whole entire internet pretty much works like this. They essentially type in search terms on Google and they're looking stuff up. And this shows when there's a lot of interest. So this is public perception. So this is like the public going, okay, I want to type what World War III freaking out. Now, when you're thinking of World War III, what's the prevalent emotion? It's going to be panic and fear. Everybody's tripping out. I told my wife about it. She's like, yo, what the heck? She looked at me crazy. Her eyes went wide open. So this is like panic and fear, which is important for financial assets because when people panic and fear, this usually starts a massive sell-off. Listen to what I'm saying. Every single great fall we've had usually had like a big bubble pop and then a massive sell-off in panic and fear, which led to capitulation. Capitulation is when people are just panic selling. They just panic sell. That's what capitulation is. It leads to capitulation, which leads to a bottom of a market. And then the Federal Reserve usually bails us out through quantitative easing or through dropping interest rates. They bail us out, and then that starts the new cycle. So this is probably one of the most important things to pay attention to right now in this video. We need to understand if for your stock market, for the crypto, we got to get this. Okay. We really have to get this. This is like a 1 in 20 year opportunity, 1 in 10 year opportunity. We could really make a lot of money off of this situation. Listen to what I'm saying. So we have this really big spike here. We have all these baby spikes, and then we have this really big spike here. And I'm looking at the public perception, and people are like, yeah, buy the dip. Like the wars usually do well for stock market. Like, no, I don't believe that. I want to show you one thing. So here's a screenshot, something I just kind of put together. There's always something that's happening under the surface versus what the public actually perceives. So for example, there's probably all these military plans. There's probably these supply and demand, dynamics between oil and all these little intricacies that we don't have the data to and nobody fully comprehends unless you're like in the industry or control part of it or something like that. There's usually like a utility part of the market which is incomprehensible. It's like the black box. There's like no way. I mean, you could get really close if you have a lot of resources and you have a research team of like 50 to 100 people to figure out like exactly how oil is going to affect the stock market. Like exactly, sure. But what the public perceives is more important because the utility of it, the supply and demand can be completely out of whack. But the public, like it could be good. Like for example, it could be like really good. But then the public is like, well, I don't think it's good, right? What's truth? Is truth the data or is it sometimes what the public perceives? If everybody comes into agreement that it's panic mode, even though the numbers are not panic mode, they'll still sell. There'll still be a panic sell. This is why I said emotions, because people trade with emotions. They buy with emotions. They sell with emotions. We need to understand what the public perceives. This is why Google's search history is so important. The search trend is so important. By the way, this is Google Trends. So what I did is I created a couple of charts. So we're going to go through those charts and I'm going to show you what I found. And it's actually very clear. So if we go through the data, this is the actual data of the Google search history. Now look at the actual, website, the Google search term website. If you look at the website, notice that there's a whole bunch of baby spikes, but look at how it's scaled. It's scaled out of 100. It's not actual searches. So it's not like 15,000 searches on this exact day. That's not how it's scaled out. It's scaled out 1 to 100, as you can see right here. So this has been the most freak out event in history, which was in January 2020. And then the second worst was right here in 2022. So January 2020 was like obviously around COVID, which is interesting because COVID didn't happen till like March. That's when the market dropped. February, March, I believe it was March is when the market dropped. So the World War III search term kind of predicted, COVID to a certain extent, and it came out of China. I'm not going to go into the details, but you get what I'm saying. Like, that's crazy, right? Because we know that the market dropped substantially. All financial assets dropped in 2020. Now, the second drop right here, or the second spike, 2022, well, we had another massive drop. That was right here. That was, and this is the monthly time frame. If we pull it over to the weekly, that was right here. This was the only other drop we had. So it's very clear that the massive big spikes, like the big ones like this, they lead to market turndowns. Now, all the baby spikes, not really. So let me show you what I'm talking about. So what I did is, remember, we looked at the data. What I did is I basically highlighted everything that's over 3. So again, it's 1 to 100. So these are like the baby spikes. And you can see the vast majority of them don't really lead to a market turndown. Very clearly, this green line right here is a search history. This is the SPX, this is the S&P 500. The reason why we're looking at stocks is because they're risk on assets, and cryptocurrency generally follows the exact same trajectory. So like they're kind of like one and the same. But the gist is, as you can see, we have these baby spikes don't lead to market turndowns. Now, I set this above 5, and then I looked at everything above 5, and then we can get a little bit more clarity. So now we see this is above 5. So this was like before 20, this was this spike. So if we bring it over here so we can just get really clear, that was this spike. So we have like a couple, this was April 2017. So it was kind of like a baby spike. The market did not fall around that period of time. Let's pull it up. So the market did not fall around that period of time. But then we have the big spikes, the market fell, right? And then here's some other ones where it's above 5. Now, if I do above 10, it's obvious. Above 10, every single time the market dipped. Let me be clear with you, above 10. So like the absurd spikes. So 1, 2, and potentially now. Now look at the dotted line of what we're going through right now. This is potentially now. This third right here, if it starts to go over this spike, it will be very obvious according to perception. So now there's a whole bunch of different dynamics to predict markets. According to perception, which I believe is the #1 most important reason for asset prices, I think it's why people panic sell. It's the most important to me. Now there's other perspectives, but it's the most important to me. According to this one perspective, yes, we will have a market turn down. If this spikes, and it looks like it is, if we have more war tensions and Iran bombs something else, and then Trump comes in with the heat again, and people really start talking about World War III, regardless if it does happen or not, if people start talking about it, well, it's, again, I say, I want to be very clear, it is very clear. It is very clear that we should have a massive market turndown. So it's not the time to start taking absurd risk. It's the time to step back and start researching altcoins, start researching stocks, start researching risk on assets. So when the market does dip, we take advantage. Now, can you make short-term plays? Hey, if that's what you want to do, that's what you want to do. We called the coin, I think yesterday or 2 days ago, that went up like 700%, and then it dipped down. It's like, like this stuff, when I buy a coin, I usually look on, holding it for 3 to 6 months, but you get the point. Like, it's up to you at the end of the day. But what I would say, it's very obvious that public perception is shifting to a World War III mindset. And from what we've seen for all the data, when it's 2004, this is all the data we have in Google. Yes, it looks like the market, people will fear and panic and start selling stocks. And we have interest rates interest rates are high right now. And I've been talking about interest rates for a long time. I've made videos on this for a while. Interest rates have been very high. That's constricting liquidity. We need liquidity for risk on assets to do well. This is a very clear risk off environment, and I can prove it more. Risk off basically means that people are taking less risk. So if we pull open commodities, well, guess what's at all-time high? And you should know this, gold. Gold is a risk-off asset. The only reason people buy gold is because they're trying to preserve their wealth. They think something's gonna happen. It's like they think the world's gonna end or something, not all the time, but most of the time. People accumulate massive amounts of gold because they think something very crazy is gonna happen, right? Gold prices are all-time high, which is crazy. Now, if we look at US oil, same thing. Iran, obviously they produce a lot of oil. So it's spiking up a lot. This is signs of, hey, there's worldly tension. There's tension in the world. hey, maybe don't freaking buy 1000x meme coin with, like, come on, right? Just think about that for a second. Take a step back. I'm not trying to be mean. I know a lot of people are upset because I told people to sell a couple months ago, but look what's playing out. Maybe I was a little too early, but like, bro, like, be careful, bro. Take profits. Don't be a degenerate. Don't be greedy. Just chill. We're going to make money. Why are you freaking out? Everybody's freaking out all the time. Don't worry. We're going to make money. Just chill. Because this is the best time and the best opportunity. People get rich during market turbulence like this. So, yeah, just to be very clear, I do believe if we get a continued spike on this search term and the perception turns towards World War III for real, and people in public are like, World War III, they're going to freak out and they're going to start selling. So, that's my official opinion, guys. Thank you guys for watching. And if you don't get with it, you will get left behind. Catch you guys in the next video. Peace out.